Everyone, this is Modified Darvas Box MDB coming at you here around 12 noon on Saturday. It's been a really interesting week. Things are getting more positive, and I wanted to make a quick video and talk about positives. Before we get into it, for people who don't know me, I'm a regular guy who built a investing trading system based on this book. Check it out on Amazon. It's a really good book. A lot of good ideas in there. In a nutshell, I look at fundamentals, but also technically I look for stock patterns that have this type of bullish box pattern where it goes sideways and then breaks out. And then also look to keep tabs on stuff with bearish box patterns just to make sure I'm not buying those and avoid those as much as I can instead. All right, so I mentioned the market looks like it's getting really good and strengthening. A lot of stocks are moving, breaking out, and I'm pointing this out. This is me patting myself on the back. Everybody's probably rolling their eyes now, thinking, "Oh, he's full of himself, MDB." But to me, what I like to put this stuff out there is it's actually hard to take a stand and really put your foot down and say, I feel this is going to happen and stick to it. And to me, this is a validation of process. The process where I look at fundamentals and the process of how I look at charts. And when it all comes together, I just can't help but think that things are going to change. So I put it out there, and my Twitter stuff is more journaling purposes. I've had my ass kicked so many times. You would not believe, because the market humbles you like crazy. But I'm giving myself a pat on the back and validating that the process that I'm using led me to put something out there. I know you're probably rolling your eyes and thinking, Jesus, come on, but I'm feeling really good about this. And the best part is I'm seeing things go that direction and show that maybe my analysis was not off base. So let's talk indexes. So indexes, this is really cool. The NASDAQ has broken out of its Darvas box. So you see right here, it had all these other attempts. Now it's above it, and it's just looking really positive for that. In technology is the leader right now. The QQQs broke out actually last week, but boy, I had a scare here. You see, it went up, it came right back down. But this past week that just ended, no, it's decided we're going higher. The sector within the Nasdaq, semiconductors, wow, this one, look at this thing blast off from its Darvas box. Once it clears the box and confirms it, I change the color to green because that indicates a positive breakout. Red, like you can see over here, red is a negative one, and then the ones that are in process I color yellow. Just a good way of separating that out. But look at the SMH. It had the scare based on Texas Instruments here where people panicked. Texas Instruments, oh my God, oh my God. Texas Instruments has not been an important company since, I would argue, 2000. And yet people are panicking that. And then the next day, Intel, which is a way more important company than Texas Instruments, Intel reports good numbers, and other semiconductors are coming in with good numbers, and it's like, whoops. So it just boggles me why people panic so much. And I'm not talking about retail. I'm talking about institutional people. Institutional people are just as flawed as retail investors, in my opinion. And we have to live with the consequences, and that's one of the consequences of when that happens. But so again, technology is leading. Now here's the S&P 500. As you can see, it's just a smidge off of breaking out of its Darvas box. It's really close. Getting ready, maybe this next week. But that helps confirm the Nasdaq, which is already broken out. And now we look at the Russell 2000. Russell's not as good, but here's the positive I'm taking from the Russell. It's above the long-term weekly moving average and appears to be pointing higher. It's been moving higher, etc. And look at this. Remember my little tweet there? I said I got bullish on the 14th. That's this phase right here. Boom, boom. Since then, it's been, knock on wood, so far so good. But those are some really good things. And now let's look at another sector, high yield bonds, HYG, moving higher from its Darvas box. That's more confirmation that the market is strengthening and not weakening. Here's another index. Whoops, that's not right. XLF, this is financials. Oh, look, another Darvas box breakout. This sector's moving higher. And yeah, the XLF, and then one more, the IBB, biotech. Biotech. Biotech is risky. Look at this. Boom, boom, boom. And it all started with this green, big green volume about 4 weeks ago. So, in my opinion, market's strengthening, and people are beginning to realize that, and now they're beginning to buy stocks, and stocks are moving up. Now, let's talk about a few of the winners here. One of the ones which is leading everything higher, Apple. I was pounding the table on Apple, like somewhere like right in here in September, because it broke out of its Darvas box, and the numbers, the fundamental numbers, are showing increased growth. Look at it, up, 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 and away it goes. Core portfolio holding, in my opinion. Now let's look at a few of the recent breakouts. Keys, yeah, it did break out on above average green volume, but it sort of struggled a little bit. I think that it's because the sales and earnings numbers aren't, that strong. So is this one going to blast off? Yeah, probably not. It'll probably go for every 2 steps up, it takes 1 step back. So slow. Hopefully it grinds higher. We'll see. We'll be watching it. Here's one which I fumbled. I screwed this trade up. I owned it. I sold it, and then it went up. But NTNX, breaking out from a Darvas box, just barely above average volume. So it's not like this one here or these bars here, but it's got more demand than supply. So it's going up. Talked about biotech. Here's one, RGNX, closed above its Darvas box for the week. Missing the volume a little bit, but it's above that, and it's biotech, so that's risky. But be careful about biotech. But it's just an indication things are going well for the market. Here's RH. Yeah, people buying more furniture, housing. RH, look at that. It's moved out of Darvas box, and then the king here, Tesla. Boom! Boy, people who took the risk right before earnings or were buyers anywhere in here, when it was in the box, boy, they sure got paid on this one. And it's really on the backs of all the people who shorted Tesla. It's still Elon. I think he's a little crazy, but boy, if he changes things around, Tesla could go a lot higher. That's a heck of a reaction. So, keep an eye on that one. And but it goes in the category of new leaders. Okay, a few stocks that are baking for now. Now you can see here the list of stocks that are in what I call textbook breakouts, like INMD, where it forms the structure and then blasts out on big volume. There aren't that many still yet. There's more in the what I call baking, where it's in a box and has potential to break out. AMD is one which I've been pounding the table on right about here when I made that market conviction. AMD's been doing great, and now it's right on the edge, getting ready to go higher. Hopefully, knock on wood. It reports earnings next week, so that's always the wild card. So you got to be careful of that. But it looks positive. The list of stuff that's baking, yeah, it looks like a pretty good list. Here's one that's been a wild child, COUP. Look at that. Buy, sell, buy, sell, buy. And as a result, it's roughly, close to the middle of its Darvas box. A lot of drama on this one, and really, really a roller coaster name. But it's way more positive than a lot of other companies out there. Here's one that's looking good: Palo Alto Networks. It's in a box, but this past week it shot higher, and it looks like it's got potential to break the box and break out. And it's got earnings in December, so you don't have to worry about earnings for a little bit. So this one's looking very promising. Still could use some more volume, but hey, put it on the radar, put it on the watch list, keep an eye on it. One I like, Etsy, because of this big green volume right here. And that's part of my mantra. If the big boys want it, then I want it. And the opposite is if the big boys do not want it, then I sure don't want it. But the big boys, based on the chart, wanted it over here. And it's got earnings this next week, so got to be careful of that. But I'd say there's a good probability it might blast up higher. But, with this one so close, you just probably got to just wait and see. Stocks that reported earnings that look great. PayPal. Look at that big green volume bar. So PayPal was down here. It had broken the box downwards, and that was on my no way list. Avoid, avoid. Well, now PayPal completely turned around. So this could make your buy list at this point. Put it on your watch list. Keep an eye on it. Now, lastly, so as I want to wrap this up, not take too much time, a couple stocks that are on the uh-oh list. You might want to have second thoughts on the avoid. Here's American Tower. Great run from November of 2018. Moving higher, moving higher, moving higher. Well, look what it's done here. It broke the weekly moving average back in early September on big volume, big red volume. Didn't really do a whole lot. Now it's broken the weekly moving average again. It reports earnings in a few, next week. I would be nervous if I was holding this. In fact, if I was holding this, I probably would have sold out. You can always buy it back if the fears are unfounded, but the way this is acting, that doesn't look so hot to me. Be careful of that one. CMG, another one. Great run from January 2019, up, 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 up. What happened here? It broke the weekly moving average on big red volume. That's it. I'm out. People who bought in here in January 2019 should seriously be thinking of taking the money off the table, in my opinion. One last one, which just all of a sudden seems amazing that it seems sort of dead, is SHAK. Now, every time I go to a Shake Shack, it's crowded and full of people. But the stock probably has gone a little farther than all that, probably discounted all that activity because it went up, good earnings, etc. Now it's come down and it broke the weekly moving average, and it just isn't moving with the market. The market's moving up, and SHAK is struggling more moving down than up, and that is not in flow, in tune with the market. So at this point, that goes on maybe the avoid list or don't buy it list. Just watch it. So these are the signs you got to look for. Overall, I'm bullish, and I think people and the market are getting more bullish. So we'll just have to watch and see how it plays out. But things look promising. Otherwise, I hope you have a good week. Talk to you soon. Bye.